Hello traders, welcome back to today's episode of Greenback Riders. So let us take a look what the market did. So yesterday evening we actually capped up. We went above this important hourly line at 5741. We came back, we retested that, and then there was no looking back. We went straight back up. We closed above this weekly micro gap, and then at 9:30 in the morning the price came down. It retested the highs of this weekly micro gap, and then it kept moving up. We broke out of the 5800, we went to the 5818, and after that there was a three-legged pullback down to the midpoint of the day, and then we bounced once again, went above the previous high, but as of now we have not been able to hold the previous high. But then we will go ahead and look at what we are expecting for tomorrow and the rest of the week. Now, even if you look at this SPX chart, you will see that this 5750 was a major area which we broke out of. We tried to get back down there but failed, and then we went up another leg, actually a couple of legs to the upside, to the 576066 areas, and then the price actually came down once below the 5750, twice below the 5750. However, after this particular drop, this is the 15 minutes chart. However, after this particular drop, we did not get a follow through and the price went back up, and then the target became the 5775 area, and we did get that target to the upside. So let us now take a look at what are the expectations from tomorrow. Again, we will be starting to look at the price action, and after that we will look at the SPX gamma levels for tomorrow, and then we will see what is the volume profile holding for us. Let us start taking a look at the monthly chart. It's really interesting right now. So this was the September low, and this month we came below that September low, and then we have pushed back up. Now, if the price is holding this area, if we are drawing the fib right around the highs and the lows of this monthly bar, then we will see this is 5904.25, or the 5905 area is actually the 50% of the monthly bar, and we bounce from here, and right now we are above the 50% area. Now, if price is able to hold this area, my first target will be this monthly double bottom at 5849.5 or 5850. So it is again the 5846 to the 5850 generic support resistance area. And if we break out of that, then we can come to this 5884, which is the upper 1/3 of the monthly chart. Then we will have to see if there is any attempt of reversal happening there. Otherwise, we can actually come up to this 5906 to the 5915 possible monthly resistance area. And if we are above this monthly resistance area, I think mostly we will get up to this 5996 to the 6000 areas once again, and then we will see towards the end of the month. We still have 5 working days left in this month, so it is highly possible that there is a possibility that this month will actually end as a bullish candle, or it will close somewhere near these highs as a slightly bearish candle, but that will again become a pin bar on the monthly chart, and that will have a bullish structure. So at that point of time, we will see what are the possible areas where the market can reverse. Now, if this area does not hold, the price may again come down to the 5764 to the 5747 area. This is the monthly gap that we have. It's a micro gap which has not been closed. We have not closed below this micro gap. So if the price keeps on coming down, does not hold the 5800, this 5764 to the 5746 area, this can be another point of interest where the price may actually bounce. I will have a box marked there right now so that it is there for the reference. And then if we are breaking this down, then we can come down to this 5722 levels again, the 5664 and the 5615 levels subsequently. So this is how I'm thinking the monthly progression may actually work out. So the first target to the upside will be this 5850 area. Above that, we can come to the low of January, which is the 5863. And then if we get above that, we will come to this possible monthly resistance area at the 5903 to the 05 levels once again. Now, looking at the weekly chart, we had 4 weeks of continuous down move, right? And after that, we had this inside bar. Now we are breaking out of the top of this inside bar, and as of now, we are above the high of this particular bar. Now, if we consider that this was the mother bar, and then we are drawing our fibs on top of this, if the price cannot hold this 5809 level, we can come back to this 5784 area, which happens to be the upper 11%. And if we break down from there, we can very much see this 5757 area, which is this gray area here. Otherwise, if the price is actually holding these areas and keeps moving up on the weekly chart, we will first come up to the 5836 levels. And after the 5836 levels, this will be the 11% area of the extension, which is at 58.50, just like we were talking about in the previous monthly chart, and that will be the double bottom areas, as well as this will be the low of the weekly trading range. So then we will have to see whether we are able to get above that 5850, hold that, and in that case this 5873 to the 5890 can be the target. That will bring us to the possible monthly resistance area, and then we can actually get up to the 50% extension at 5932 and continue up from there. And if we are getting above this 5932, the target will be somewhere in the 5993 to the 6003 area again, which happens to be the important weekly area, because there has been a lot of transaction that has happened here. And above that, we can actually get the 1:1 of this particular mother bar to the upside, which is at the 6056 area. So these are the different levels that we have with respect to the weekly chart at this point. However, we also need to remember that after this new low or the strong move down, this is the first entry long that is happening, right? This is the first leg up that is moving up. So there is always a possibility that we will fail here and we will come down to these levels again, retest the lows and keep going up. There will be a similar observation on the daily chart as well, and we will take a look at that when we see that. However, if we are coming down, this will be the high of the last week at the 577273 area, and if we are falling below that, we can come to the lows where the 5741 area where we actually started this week. But if we are not able to hold that, it will mostly come down to the bottom of this particular micro gap. However, there is a possibility that we may not come down to the bottom and we can stay here for some time, and then we will have another leg down below the low of this bar. And then if another week is starting and creates a bullish week, at that point of time we can get confirmed that okay, this may be the second entry long that the week is having, and the market will push up another level at that point. However, on a Friday itself, we had a second entry long on the daily chart. We will take a look at that, and then we will see what is the measured move of that particular move that happened till last week, and we will see how it matches up with the higher time frame levels. So at this point of time, this is still a pullback after these 4 weeks of bearish move, right? So there is always a possibility that we will get a second leg down, but that setup is not yet available on the weekly chart. We will look at the daily chart and the hourly chart as well, and then we will see below what level we can expect price to move back down to these levels once more. Now let us take a look at the daily chart. Now on the daily chart, if you see, we had this first leg down, we had the second leg down, this was the third leg down, we went back up, this was an inside bar, so this was the fourth leg down that happened. Then we went back up and we had 5 legs down totally in the daily chart. And after that, this was the channel that we had on the daily chart. These were by connecting the highs of these bars, and now we have broken out of this channel. Now most of the time, as per price action rules, if there is such a tight channel and then the first breakout of the channel does not hold and it wants to come down and retest the lows once again. So in case the retest happens, I would expect the price to come down and test these daily low areas, and then we will see if we bounce again from there, or whether we are breaking it down and trying to come down to the bottom, do a double bottom here, or break this down and do one more leg to the downside with respect to the weekly chart. So that is also a possibility at this point of time. However, if you see that the market has moved up, this was the first leg up, we had the pullback, this was the second entry long, we did not close anything below the second entry long, and then we have gapped up after Friday and we went up to the 5826 area, and then we have dropped a bit. Now we will have to see how the price moves up, but as long as this 5771 is holding, it may pull back to the 5771 area as well. But as long as that is holding, there may be a possibility that the price will not get any traction to the downside, right? So if this area is breaking down, we will see whether we are able to get to the 5761 to the 5741 levels again. And if 5741 is breaking down, then only we will try to see if we are able to come down to this 5625 to the 119 area, and the breakdown of that can actually get us to 5700 to 5697, and then back to this 5653 area or the 5650 area, breakdown of which we will see that whether we are able to get down to these levels. Now if the price is coming down today itself, then this will be the line where the price will hit the trend line again, which happens to be at 5667, and we will put a line right there at this point. Now, if we are trying to do a measured move of this whole thing, and then at this point, this was the first move up, then we had the pullback, till this level. So that means that the price may actually come up to this 5852 area. If we get above this 5826, the next area will be this 5852 area. That will be the 1:1 of the price move, and that is also the monthly double bottom breakdown, weekly trading range lows. Now we will have to see if we are getting rejected from there again. If we are getting rejected from there again and we are closing a strong bearish day tomorrow or day after, there may be a possibility that we may come down and revisit these lows at least to the at least to the 5667 to the 5650 areas. Otherwise, if we are breaking out of this, then again, just like we talked earlier, we will target this upper 5900 levels, then the 5950, and then the subsequent levels to the upside. We also need to remember that right above this at 5860, this is an important daily line because this was broken out. Now we have to, if we go above and do not cross above this, then the down move can even start from here. Otherwise, if we are going above and we go above this 5915 and everything, then this will be a area of false breakdown and the price has moved back up. But for now, I want the price to go to the 5852 area. We will check out what is happening there, what is the price action that is going on there, and based on that we can decide whether we are going to get a good reversal or the price will keep moving to the upside. So based on the daily chart, if we are moving above the high of today, and then if we are moving above this 5828 area and holding it, I would expect price to get up to this 5840 to the 42 levels. Above that, we can get to this 5850 and a 5861 levels. But I am thinking this is the area where we can get some rejection. But if we do not get any rejection here, then the price will move up to the 5874 to the 73 levels, and then to the 5884 areas, and then finally we can see the 5890 to the 5900s. Now, if we are looking at this particular 4-hour chart right now, you'll see that this is the channel or the pullback channel that the 4-hour chart has created. From this low, we went up one leg, we came down, this was the second leg up. After that, we had a two-legged move to the downside, and then another two-legged move to the upside, another two-legged move to the downside. So we were in a trading range in this particular area. However, now we have broken out of this. So if this was the trading range starting from 5649 till the 5760, so that's almost a 90-point move. So if it want to replicate the 90-point move to the upside from 5760, it can easily take us to the 5850 area once again, and that will be the 1:1 of this particular trading range to the upside. But if we also see here, this is a wedge line, the 4-hour wedge line that we have. Now it is very important that we hold above this wedge line, we get above this 5827 line, and then we keep moving up towards this upper trend line of this particular 4-hour channel. So that is what we have on the 4-hour channel right now. This important daily low areas, if you see, these are also corresponding with the 4-hour chart. But since we have the dailies marked here, I do not want to clutter up the chart too much by writing a lot and drawing too much lines. Anyways, we have a lot of lines in this ES HDF SNR chart. So we need to keep in mind that if the price comes down, we will see that whether we are coming down in this area, whether we are trying to break down this. What happened here is we were in this channel, we broke this channel down, and now we have created a new high. Now we do not know whether the price will be able to get up to these highs or it will fail right here and come down to these areas again, break down this trend line and start coming down. But that will only happen once we see that we have broken down this 5739 area and we are at the around the 5720 area. We are breaking that down again. At that point of time, we can see this 5682, which is again the CPI lows, and below that we can come down to this double bottom areas of the chart, which also happens to be the 5650 or the 565075 line on the daily chart. Now, before we can get up to this 5900s, if we look at the hourly chart right now, we will see that the hourly chart is also following the similar channel. So if we are getting above this, we will be hitting this 5843, which happens to be the hourly double top here. Above that, we can get to that 5850 line that we discussed, and then we can get to this 5861. And if the price keeps on going up from here, this 5874 will be a very good area to take some profit, because this was the previous hourly area where the price broke down. Or otherwise, we can come up to this 5882 area also, and then we can start a pullback once more. However, if we go above this 5882 area, this will be the next area of resistance at 5892, which happens to be a bad signal bar from where we broke this down. And if we are going above, then we will mostly come and touch this 5900, get to the 5902 to the 07 area, and then we will see if we are able to get above the 5920s and continue to the upside. Now, on the downside, as long as this 5770 or the 5771 line that we were talking about in the daily and the weekly charts, as long as this is not breaking down, there will not be any good traction. This can happen overnight, that we can come down to the 5770 areas overnight and we can start bouncing from here again, get back to the 5796. And if we are getting back to the 5796, the price can still keep moving up towards the high of today, and it can actually break out and get to the different levels on the upside. However, if we are falling below this 5770, 5771, we will mostly come and hit this 5755 to the 50 area, which is the bull flag area right now. And if we will have to see whether we are holding that bull flag area, this is another bull flag that we have right at 5770. We will have to see if we are holding that bull flag and then we are bouncing from there. And if we are breaking it down, we will come to the lows of today, and then we may actually try to fill up this gap and come down further towards these levels. So those are the major support and resistance areas as far as price action is concerned. Let us now take a look at the SPX gamma levels. So these are the different important gamma levels that we have at this point of time. This is considering till the end of this week, and then the monthly expiry again on April 17th. Now, what we need to remember here, that the whole gamma environment has become positive above this 5700. We have complete positive gamma in all these areas, even if you're looking at the next 20 strikes or the next 50 strikes above the close of today. So this is a positive gamma area. So a positive gamma area basically means the market makers will actually sell the rip and buy the dip, right? So there is a possibility of a choppy move. The market is bullish, so it can keep moving up to the upside. However, we need to be careful. We need to see where the price is creating higher highs and higher lows. And based on that, we need to take our decisions. It is not going to be very easy in these areas at this point of time. If we open somewhere here above the 5777, 5776 areas, we can come and hit the 5800. But again, this is a call wall that we have. This is where we have the maximum call interest and the second highest put open interest. We can easily get a rejection here and come back to this 5770 or even to the 5750 areas. Now this 5750 to the 5740 areas, this is where we have the maximum positive gamma. So if we are falling below this, then there is also a possibility that the price will come down to these lows and finally come and hit this 5700 once again. Now there is a spread of 50 points between SPX and ES. So if we are coming down to the 5700, that means ES will be sitting at the 5750 area, and that is again the bull flag area that we created in the ETH hours on Sunday evening. So we may get a bounce back from here again. Now it will again depend where the price is opening up. Now if we are falling below this 5700, then the aggregate gamma actually becomes negative again, and the next major support comes in at the 5650. Below that we have a minor line of 5 at 5625, and then below that we can come down to the 5600s once again. So this move is also possible. Now we know that there has been a lot of talks about tariffs and things like that. So at any point of time, if something comes up, that move may get accelerated and we can actually come and hit these levels to the downside. Otherwise, the price can keep moving up. If we are opening somewhere here and we see that there's a strong move that is happening, or we open somewhere here and then we see there's a strong move that is happening, then most probably it will get to the 5775, break out and get to the 5800. Now that may not be a straight move up because of the positive gamma environment. So we will have to be very much aware of the higher lows and the higher highs, and we will have to see how many legs has been moved or how many points the price has moved, and based on that we need to take profit as well as initiate trades and put your stop losses. Once we move above this 5850 area, then we may actually see that there is a good possibility of a swing up to this 5900s and above, because that is where the gamma drastically drops again. It is still positive, but it keeps on dropping, and then it can continue up to the 6000 area, and the 6000 area is the highest aggregate gamma if we consider till the end of this monthly cycle of 417. But from 5700 to the 5850 area, this whole area is infested with positive gamma. So there may be sudden moves up and down in these areas. So it will be ideal if we can take our profits at 10 points, 20 points from the bottom or from the high, and then hold a runner to see if it can go further up or further down. So that is all that we have from the gamma perspective right now. Let us now take a look at the 15-minute volume profile chart. Now the link to all these charts that we are talking about are given in the description below. Also, if you're liking the content of these videos and if these levels and concepts are helping you out in your trading, please make sure you like, comment and share the video. Subscribe to the channel if you're new here and click on the notification icon. So this is the 15-minute volume profile chart on the RTH. So if we are breaking down this low, we will mostly come and hit this particular box at the 5767 to the 5770 areas. And if we are breaking this down, our next target will be the 53 to the 50 area. And then we will see if we are coming down there, we will get to the 5740. But if we are actually coming down from here, I am thinking that there is a big possibility that we will come and hit this 5725 to the 17 areas once again, and then we can bounce from here. And those plays will be positive only if we see that there is a good move down the 5793. I will actually wait for the 5790 to give up before I decide that whether the short is going to work out or not. On the upside, we can get to this 5833 to the 5840 areas. Above that, this is an untouched POC at 5850. That is the line that we talked about in our price action charts as well. But if we are getting above this 5850, the next target will be here, and then to the 5897 or the 5900 areas. So we can have strong moves and then strong pullbacks again. The pullbacks may create double bottoms, and then the price can keep moving back up. But what I'm thinking is the move to the upside will not be that straight at this point of time, and it will be infested with several strong bearish pullbacks as well. And then if we are getting above this 5900 and the 5902 areas, the 5925 becomes the next area of interest, followed by 5939, and then we have the 5955, which is another untouched POC to the upside. So these are the levels on the 15-minute volume profile chart. This is where I will end the video for tonight, and I'll see you guys again tomorrow morning in the live webinar on Google Meet. The link to the free Discord server is given in the description below, and if you want to join that Google Meet, please join our Discord and you will see the link pop up around 8:45 a.m. in the morning. So that is where I'll meet you guys once again. Have a great rest of the night, everyone. Bye.